Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Oh, I got to send out the email for the class tonight. Hey, we're financial advisors here at Jazz Wealth. Thanks for joining us here on our show. We call it the Closing Beat. Just a fun way to reference our name, Jazz Wealth, and of course what we're talking about, the stock market, closing and the performance for the day. Hey, if you really like what we're doing here tonight, come back later, grab a glass of wine, 8 o'clock tonight Eastern time. We'll be back live on YouTube, and for our customers in the dojo, we've got a live open house sort of class where we're going to cover how do you handle the last couple years before you retire. Specifically, what changes do you make, and how do we come up with those changes? Like, what's the stats and the details behind it? You guys know I like my stats, so we'll be covering that tonight. If you want to join us, 8 o'clock Eastern time, it'll be free. Just show back up here, and we'll go through it. So, anyways, that's that. Let's take a look at the stock market today. You got a slight down day overall. You got tech generally trying to lift us up to new highs. Couldn't quite get it done. And, you had good news most of the place there. We look at the S&P 500 teasing, but not really able to get to new highs. It had everything ready for it today besides maybe energy and financials, which we'll cover. But generally, it's not able to make new highs today. So we're going to have to save that for another day. There was some excitement early in the day as we had the initial jobless claims come out, showing a downtick under 1 million. We had factored in 1.1 million, and we got to 963,000, which was celebrated as something exciting. But hey, first time in 21 weeks we've been under 1 million there. So we're headed in the right direction. Still a very impressive number overall if you happen to be paying attention to that sort of thing. If I take a little bit step further, we look at continuing claims. That's been the main focus here. How many people continue to need the jobless assistance? And that number ticking lower as well. That's going to be a new low here over the last few weeks. And so at least a little bit to celebrate early on in the day, and that did help the market start to move higher. You've got the NASDAQ, which is mainly tech-driven here today. Not really able to make new highs, but still look pretty good. Just a decent day. Was the best performing index and the only one that finished in the green, thanks to Apple and Tesla. So you got Apple and Tesla responsible for 1/3 of the total gains today on the NASDAQ overall. And I kept seeing on TV where they would like chime in, like there was some sort of major news event happening. They'd be talking about something completely different and then say, oh, just want to update you, Tesla is now up 5% for the day. And I thought that was weird. Like, there were so many other stocks that did well today. I don't know why we were so much focused on that. It was just a headline stock that they know a lot of people are paying attention to. But if you look at things in the NASDAQ, you had Zoom, 4.5%. It was a great day back to the 50-day moving average. Mercado Libre, also little recovery there from the pullback that it's seen recently. That was up 4%. Workday had a great day, almost back up over the 50-day moving average. Very strong day, adding 3% as well. And I thought DocuSign looked interesting for the majority of the day, up 3%, trying to recover some of its most recent pullback there. So there was a lot of other good things going on that didn't really grab any attention today. Unfortunate. You got the Dow basically flat on the day, slight downtick overall. Apple did its part, as you just saw a second ago, but Cisco erased all of Apple's efforts there. Cisco with a bigger than normal decline on the day for earnings, right? It was down 11% overall, and that just erased everything that Apple was trying to do. Goldman Sachs didn't help either, down 2% on the day. Financials just didn't participate yet again. As I mentioned a minute ago, the S&P flirted with making new highs, just couldn't get it done today. That's okay. For now, we're going to use that number as resistance. So traders will say, until we get over that, there's a question mark, right? We don't know exactly what to expect there. Had everything almost going for it to get to new highs today, just couldn't do it. You notice a lot of the tech started to fade away there, which is a little bit abnormal if you're paying attention to that sort of thing. Hey, No Fin Tips videos. Last week we did a great series of them. Hope you'll check them out on our YouTube channel tonight. Wine and Wealth, open for everybody. And I'm going to share with you a watch list here in a moment. Give you some stocks to look at with some criteria to kind of teach you something new. And then I'm going to expand on this in the research section to include volatility. I'll cover that later. But basically, if you want to join our research site, it's $13 a month. Really helps us out here continue to grow and add cool things and quit messing stuff up like we do. So I appreciate the support. Let's go over to the sector breakdown here for the day. Starting with communication services. Nope, this one here. Communication services was one of your leaders here today, added about 0.5% on the day, thanks to Facebook, which did pull back a little bit, but upper 0.5%. And Alphabet looking pretty good there with its gain of about 0.5%. Those two were the biggest contributors on the day. It's very much a stock picker's sector right now. There's only like 24, 27, something like that, stocks in this sector right now. And the good ones are doing well. The bad ones continue to suffer. AT&T is one of them, not performing with the sector at all. So if you own something like the ETF, you're going to notice that your ETF's maybe not performing quite as well. It's because of names like AT&T, Interpublic, Republic Group, which also keeps pulling back, lost about 1% on the day. And the old CenturyLink, which is trying to wake up, but just couldn't really get anything done over the last month or so, right? Today was okay, but that one's sort of underperforming overall. So if you look at communication services, if you're participating as a whole, you're missing out a little bit. If you could drop some of the losers there, you'd likely be picking up some steam. You're looking at tech here. There we go. We're back to pretty much just talking about the same names in tech, Microsoft and Apple. Those are the big leaders overall. The bulk of the reason for the gains, because those two stocks make up 45% of the tech sector. There's other names that were kind of interesting today because I thought they started to fade. I thought they weren't showing the normal strength that we've seen, like Adobe. So you got something like Adobe looking just a little bit weaker, although it had a good day. It couldn't finish up near highs. PayPal also the same thing, pulling back just a little bit. And I want to point out NVIDIA, new 52-week highs, but faded, closed basically flat on the day. Retail is not a sector, but if we look at retail here, had a good day, at least to start. Not a sector that obviously is included in the markets there. Gains were basically in the relative strength areas, which would be names like Etsy, been much stronger overall than the sector or the industry. Etsy up 5.5% on the day. Stamps.com, we happen to own this one, so we're happy to see this move higher, 4.25% there. Overstock, which we just talked about, they're issuing more shares, diluting you. We covered that yesterday. And Carvana was the benefactor, although it couldn't hang on to it, of Vroom's earnings, which were generally pretty good. It turns out people were focused more on their dealerships. So Vroom has a couple dealerships, I think, still in Texas, and those largely saw massive sales declines. But overall, the company did well. And one thing I want to point out, Carvana, Vroom, and a couple others, they're killing it, right? So the sales are doing great. However, the price of the vehicles is starting to drop. So people are out there buying new cars and changing cars, but they're spending less money than they normally do. So not as much of a factor for guys like this, but you get my point there. So moving on. Financials were not participating. They continue not to participate, down just a little bit on the day. We talked about Goldman Sachs already, but you got JP Morgan moving lower. You got Citigroup moving a little bit lower on the day. And Wells Fargo, that's the weakest out of the group, lost about 0.6% on the day. Just not helping. You need the financials in there. Energy was weak on the day because you had just a little downtick there in the price of oil, but more importantly, you had the bigger names in the sector like ExxonMobil, which was down 2.4%. That's a bigger contributor to the energy sector, and EOG Resources. These two were the biggest laggards in terms of participation for the energy sector today. Price of oil just hovering right around this 200-day, just hanging in there, trying to show you a breakout. You get the feeling you're due for a big day soon. So maybe we'll make something like this a focus for our watch list tomorrow. And lastly, I'll point out gold. Gold, a little bit of a recovery. It's been wild lately, man. Up 21 bucks today. 1970 is where it finished, an ounce for gold there. So decent recovery. I think it's got a lot of work to do in the short term there. And we'll move on to our new highs and new lows for the day. Taking a look at some of those, you got 14 new highs today. Kind of a quiet day for new highs, I'll be honest. There wasn't a whole lot that was exciting there. Have some concerns about the types of new highs that you saw. I mentioned NVIDIA already, but we'll look through the list that we have here for you. Roper stands out. Very strong. It reversed all of yesterday. This was on our list yesterday because it reversed all of, it reversed all of Tuesday's gains or losses and continues that momentum today. So the lesson from yesterday carries over into today. You get to see that in real time. Dollar General kind of consolidating near highs, looking okay. One that you're not worried about selling. If you own it, you probably don't want to add anything to it. If you have it, it's just one of those that's just plugging along, right? Not too bad there. Chipotle's kind of doing the same thing, just looking a little bit stronger, up 3% on the day. Now we go over to something like a News Corp, extended, right? So it's notable on the new high list today because it keeps making those new highs. But however, the new highs are getting smaller and smaller, meaning the range of each day is getting smaller and smaller. What do you learn from something like that? Well, think about this day here. Massive blast-off day where everybody felt they had to participate. You look at the next day, you say, oh, those are people that missed it. They just saw it on their scanner or their news, and they said, okay, I'm going to dive in. Then the next day, you have people that say, well, I don't know if I should buy it here. All right, I'll buy a little bit. Then between yesterday and today, you have very few people buying, and all of a sudden some profit taking going in there. So a little bit extended. I found that to be a notable one to point out to you. Fortune Brands, kind of the same thing. It's more of a power trend here in the short term, starting to get extended, and you notice that it's slowing itself down just a little bit there. And so really that's all I have to offer in terms of new highs, new lows. Not a big list today, not too much we need to spend time on. So we'll move over to our watch list and our lesson of the day. Here's what we're looking at. We are looking at the idea between the list today was large cap stocks that have earnings growth potential and pay a dividend. So here's what we did. We looked at the Russell 1000. Those are the 1,000 largest companies out there. We said you got to have a market cap of over $5 billion. So we want to see the large cap stocks out there relative to the Russell 1000. And we also said you got to have a dividend yield that's greater than 4%. So that was the starting criteria for the watch list that you see on your screen. Next thing we did is we said, okay, expected earnings this year, what are they going to be? Let's look those up. And then let's see what expected earnings are next year. And we want to find the stocks that have the biggest spread between the two, meaning large cap stocks that pay a dividend, that have good earnings this year, and are projected to have way better earnings next year relative to what's going on this year. There's actually a lot to choose in that mix there, so I'll go through the top ones here. ExxonMobil, although it's a tough one to buy, sitting down here looking weak in the short term, that one's going to be on your list overall. Big spread in terms of earnings last year versus this year. I'm going to try to pull it up for me here. Dividend yield over 7%. Earnings expected this year is a slight loss. Next year, you got an 1,800% increase in expected earnings there. So that one makes the list for that reason. You're going to have Chevron in the mix. I know it's an energy-related stock here. These are the two largest participants in the energy sector. So if you're looking at these stocks, you are basically playing the energy sector overall. Getting about a 5% dividend, huge increase in expected earnings next year. They're pricing in a lot of recovery in the price of oil and things like that. Valero, sticking with energy here. These are in order, the top 7. Of course, weak stock, tough one to pick here, but you're getting paid a nice little dividend in the meantime, and you're investing into potential growth for next year, at least the story that they're selling at this point, though. Las Vegas Sands, of course, you know what the deal is with this one. They've had their troubles with the casinos and everything. They're largely expecting that to increase going into next year. They're going to turn a profit, hopefully, of $2 a share, which would be a nice increase of over 200% expected year over year, if that's something you like. Ford Motor Company, you know they got the new CEO. They're doing a little turnaround thing, going electric, trying to revamp the company. They always say the same stuff. Nice dividend there. You got a 200% increase in expected earnings year over year. I will share the entire list on the research site as well. But you get the idea. That's what we're pointing out there. Now, here's what you want to consider. You're looking at these stocks and go, well, those are impressive numbers. I like it. I get a little dividend. I got a large cap stock. Now the question is, which one's the best relative to volatility? Meaning, if you're going to take a shot on some of these stocks, let's say the 3 energy companies, ExxonMobil, Valero, and CVX, which one's the least volatile? Meaning, if I'm going to get the same yield on those stocks, would I not want the one that's less volatile overall? All things else being equal. So we'll cover that. I'm going to make it a video lesson in the research section. We're going to actually plot every single one of them relative to their volatility to kind of further illustrate that point that when you're building a portfolio or choosing individual stocks, just taking a look at a list of stocks is one thing, but then finer tuning that list may be able to help you generate better returns in the long run there overall. So that's basically my watch list for the day. I think tomorrow what we're going to focus on is stocks that are sort of basing weak under moving averages, meaning they could break down. That way, if the markets pull back, you've got a list of weak stocks to take a look at. So join us tomorrow on the closing beat for that one as well. We'll wrap it up here with stocks in the news, and then I'll take your questions. Well, Cisco, that's an obvious one. Cisco with their earnings coming out there. Average loss is only 0.2%. I'd obviously lost a whole lot more than average there, down 11% on the day, breaking below all of the last couple months' returns, in addition to the 200-day moving average. You got Lyft in the news. We covered this yesterday. Missed overall earnings beat. They're looking to cut costs, and that was exciting for them as far as after-hours performance. It did fade back just a little bit there because they joined Uber in saying, hey, next week we're probably just going to go ahead and stop working in California if they uphold the law that says we have to treat them like employees and, you know, all that stuff. So the stock was down about 5% today. Didn't check Uber immediately, but also Uber down 1.2%. So we'll see. We're going to find out next week what they're going to do there, sort of calling California's bluff maybe, but it's not really a bluff because it's a law or trying to be. We'll see what happens there. Apple hit new highs today. Obviously, they're firing on all cylinders here, looking really good there. They're going to introduce Apple One, which is a bundle service so you can participate in more of their services without paying individually for them. Tapestry had earnings down 1% on the day. They beat on earnings. They still lose money. So they lost less than expected, lost 25 cents versus 61 cents loss was what they expected. However, they're seeing online sales higher, which is good because they're doing something a little different than everybody else. These are the guys that own Coach, you know, the nice brands and things like that, Kate Spade and names like that. Anyways, Overall profit margin, I believe, ticked up to 68%, somewhere in that ballpark. So very impressive there. All in all, not a bad day for Tapestry. Just a little profit taking there, and a tough one because it's relatively weak compared to obviously other retail stocks in addition to the sector overall. So just down a little bit. YY, you got moving lower here. If you're not familiar with YY, it's a Chinese company. It's the equivalent of YouTube if YouTube was mostly live stuff. So YY is just millions and millions of channels. You could get lost on there forever. It'd just be people singing, just be people dancing, playing with bunnies and stuff. I mean, I'm serious. I'm not joking. And but it's live streaming there. So that's what it's a social media platform, but with the live component. Anyways, they came out today with earnings there. They beat on earnings by 7 cents, 79 cents versus 72 cents. Revenues came in better than expected, started with a large gap up, saw some weakness throughout the end of the day. Typical for this stock. Chinese stocks are more volatile than our American stocks here. And that is the last one, YY.com. If you want to take a look, pretty cool there. I think we're going to try the comment thing again. So I'll go like this, but I'm going to pull up the questions if you happen to have any. I know it takes a minute to reload or catch up because I know there's a little delay there. So maybe I'll start with a comment and then we'll see what we can do with the rest of them there. There you go. You want Lockheed Martin to break the 400 mark there. Just consolidating, man. It's just not a whole lot going on with Lockheed Martin. So when you look at when you look elsewhere with the ideas, the stocks that you have to invest in, you come over, look at Lockheed Martin, think what an investor's doing. They're looking at that going, there's nothing happening, right? So I'm going to commit money to a stock that's not doing anything, then I don't want to mess with that, right? So that's a tough one there overall, I would say, to commit new dollars to. Yep. Cool. It looked like it worked at least once there. Chris says, hey, Dustin, I'm bearish on the market as a whole. Thinking GDP will eventually be factored in. What options are available to me if you're looking to bet against the market over the medium long term? Very tough to bet against the stock market right now. I mean, you know that. It's not something new. Tough one there. If you're looking to participate, you might look at the put-to-call ratio, which has just collapsed, meaning nobody is essentially bearish at the moment. Maybe that gives you, if you're an option buyer, it gives you an opportunity to limit your risk and say, well, I'm paying less than I normally would to bet on the markets moving lower. It's a bit of a shot, right? If you, depending on what strike you choose and how long out you go. But you would know that if you're buying a put option now, you are paying less than you would have even just 5 days ago. So that would be one consideration if I understand your question correctly there. Yep. Harry says, Dustin, Kramer says companies should split their stock to help young people. I don't buy that anymore. You got fractional shares out there. There's a million places you can go to get fractional shares. Unless it's the psychology of someone wanting to pay less dollars for a stock, it's what it is. But look, it's no different than it's a balance sheet change, right? So I don't buy that argument 100%. It may make people feel like they could participate, but that's, it's just not there. It doesn't show it does show the name there. Oh, cool. That's awesome, man. It's working today. Are your gains in a Roth IRA tax-free? Yes. Simple answer. Very simple. All gains are tax-free there. And so that's it. Would you expect a notable pullback to consumer staples once there's a recovery from the virus? I would think it would go the other way. If the virus is considered to be, gaining, picking up steam, the counts are going higher and all that stuff, I would think that would move consumer staples higher, which if you look at the data, consumer staples is actually kind of responding to the data that's somehow not important anymore. You got case counts is rising here in Florida. It's just not going in the right direction. A couple counties, all right. But so far, that's the case. I would think that would be what would happen. If the virus starts to sort of fade away, you have more of an interest in consumer discretionary, retail, airlines, you got industrials. Maybe we start talking about infrastructure again. I don't know who the president's going to be, but that could be the case. So that would be my answer on that one. Yeah, pretty cool. Tien says, earnings versus revenue, what's more important for a stock's gains? Earnings per share can be manipulated a little bit. You can see what Tesla is doing at the moment to try to get included into the S&P. And it largely depends on the earnings season. So some earnings seasons, the focus is more on forward guidance, or it could be on current earnings, things like that. So it really depends on where the market's at. Remember, earnings are always looking backwards while investors are always looking forwards. So we never look at an earnings season and say, whatever earnings and revenue come in to be is what we're going to focus on. It's always something, like Netflix, adding more subscribers, things like that. So yeah, that would be the case there. You got it. If you make $120,000, you already maxed out your Roth IRA contribution for the year. Is it easy to fix the penalty to the Roth IRA if you sold some investment and go over the 150? So I think the question is, if you go over the max income limit and you've already made contributions for the year, is it easy to fix it? Yes, very simple to fix it. It gets a little more difficult if you file your taxes before you fix it. So if you sort of try to pull one over on the old government and then say, whoops, my bad, I'm going to go back and try to fix it now. A little more difficult, but yeah, it happens all the time. People go through the year putting money in a Roth, they get a bonus, their income goes up, everything's great, and then they find out we have to reverse that. It's actually very common. Yep, no problem. Do you know how far investors think ahead on average, 6 months to 1 year? Well, everybody's a little different, right? So everybody has a different focus and a different reason to invest. You've got day traders out there that are only thinking minute by minute. You have investors that are looking at the long-term growth, fundamentals, and things of a company. So it's really individual. I have no idea how you would take everybody and lump them together and come up with an average. I don't know if that's ever been done, to be honest. I love it. It's working. We'll take a couple more, and then I'll get ready for the class here tonight if it's still working. You're good. I'm just trying to find one over there. We need a name for you, Mr. Like the producer or something, Mr. Producer. Well, while we're looking for one there, I'll take one. See, oh, I see what you got. All right. Oh, cool logo, by the way. The IEF has been dropping this week. Yep. I can't pull it up at the same time. I got you. Any thoughts why the bond ETFs are responding this way? Rates this thing, Fed balance sheet. Well, you have the Fed shifting money around little by little, making decisions on where they're putting it. They haven't made any updates here recently, actually, but with rates trying to move higher, you've got the price of things moving lower, bonds, bond ETFs, things like that. Just a little bit more volatility than what you've been seeing, largely predictions on what the Fed will not have to do going forward. I love it. Miriam says, thanks for the brain stimulation. I like it. Who does the market have figured for the presidential win at the moment? The market doesn't care. It's really, really interesting, and we'll make that the last question. The market doesn't really seem to care at the moment because you would already see response to that. Biden's leading, I think, at the moment, still leading, and so the market would have already responded to what they think about him. We know what you get with Trump. Trump largely leaves the stock market alone in terms of regulation, things like that. And you also know that if you go back to the Obama era, you basically have them leaving the markets alone as well, or at least being friendly towards the market. So right now, the stock market seems to not care who wins. As we get closer to the election, and if Joe Biden, if they happen to do debates or something, and you get to find out that he's more focused on beating down healthcare or something like that, that starts to have an effect. If he's talking hard against the financial companies or talking tough against Wall Street, now that could start to have an effect. But right now, Wall Street's just like, hey, we got two candidates here that really, let us gonna do our thing. So they're all good with that. I like it. That's cool. Anyways, hey, I'm glad we got to put up some questions here today. Remember, 8 o'clock tonight, we'll be back live on YouTube. If you're one of our customers, go right into the dojo. You can watch it there as well. We'll do an open house. I'll cover everything that I like to cover as we normally do, and then I'll stick around, take questions if I can help in any way. And it's a hangout, right? We'll be back in the speakeasy there, so grab a glass of wine. Maybe we'll try a whiskey and wealth night or something. We'll try a little something off the shelf there. But I'll see you at 8 o'clock, and thank you so much for watching. Have a great rest of your day, and enjoy.